Ever wondered how pro traders predict market movements? It's all about using the right indicators. Today, we're revealing the top 5 indicators every trader must know to boost your win rate and maximize profits. Let's dive in. First up, Relative Strength Index, RSI. This indicator helps traders identify overbought and oversold conditions in the market. A reading above 70 means a stock or crypto asset might be overbought. Time to consider selling. A reading below 30 means it's oversold, signaling a potential buying opportunity. Next, moving averages, your best friend for spotting trends. The 50-day and 200-day moving averages help traders determine bullish and bearish trends. When the shorter moving average crosses above the longer one, it's called a golden cross, a bullish sign. When it crosses below, it's a death cross, a bearish signal. The MACD is a momentum indicator that shows trend direction and strength. When the MACD line crosses above the signal line, it's a bullish sign. When it crosses below, it's a bearish signal. Pro traders use this to confirm trend changes. Ever seen stocks or crypto prices bounce between two bands? That's Bollinger bands at work. When prices touch the upper band, they might be overbought. When they touch the lower band, they might be oversold. This helps traders spot breakouts and reversals. Finally, Fibonacci retracement, a powerful tool for predicting support and resistance levels. The 38.2%, 50%, and 61.8% levels are key areas where prices often bounce or reverse. Many traders use these levels to plan their entries and exits. That's it. The top 5 indicators that can supercharge your trading strategy. Which one is your favorite? Let us know in the comments. Don't forget to like, subscribe, and hit the notification bell so you never miss an update from Quantum Trades Daily. Happy trading!